What's up, everybody? Welcome to the Stocks channel. My name is Cory, and in today's special Sunday episode, we're going to take a look at the S&P 500, and we're going to look at what to expect to finish out the year 2020. Will the stock market continue to head higher on a Santa Claus rally, or are we due for a correction to end the year? So let's go ahead and crack open this chart. Alright, so this is a weekly chart of the S&P 500, so each candlestick does represent an entire week's worth of price action. So we could see last week that prices on the S&P 500 did close higher. We see the price action still over that 5 EMA, and we still have this really strong bull trend on the S&P 500. All of these moving averages are strongly trending towards the bull side, which means there's a lot of bullish momentum in this market. That bullish price action continues to close over the 5 EMA as prices continue to head higher. We're still within the upper Bollinger Band, and we're going up along that upper Bollinger Band, which is the sign of a bull market. In bull markets, we spend more time near the upper Bollinger Band and less time near the lower Bollinger Band. We can also see that the 5 EMA is separating from the 13 EMA, which means that the momentum is strongly building, and we have this really nice positive sloping 20 simple moving average and a positive sloping 50 EMA. So overall, looking at the price action and looking at the technical trends in the S&P 500, we see very strong bullish price action, which implies that the stock market is likely to continue to trend higher. So let's go ahead and check in on our bear bull survey. And we can see that we did lose some bulls last week, and we're now down negative 4.6% for the bulls. Now the historical average for bulls is 38%, so we still have more bulls than average. But we can also see here that we had 5.2% increase in neutral. So there's a lot of people trying to go to cash as the market heads higher. And remember, I've talked about this before. The more cash we have on the sidelines, the more likely the stock market will go higher. This works in any market. If there's no cash on the sidelines, it's really hard for the market to head higher. You need cash because you need people that can buy in at higher and higher prices to drive the stock market higher. So we're likely not going to see a correction in the stock market until this bull survey shows way more bulls and there's no longer any cash left on the sidelines because everybody and their mother is now in the market. That's the time you want to get out of the market because that's when the selling begins. So right now, I don't see anything concerning in the survey that says we can't go any higher right now. We can also take a look at the S&P 500 positioning report, and we can still see that there's only 40.55% of traders that are net long for the S&P 500. So we still have 1.47 to 1 for bears to bulls. So we almost have 50% more bears than bulls in the S&P 500, which means that they're likely shorting this market. And if you're shorting, you're likely eventually to get short squeezed if the market continues to head higher. So there is still cash on the sidelines, and we still do have a lot more bears than bulls. Remember, like I said earlier, you want to get out of the market when everybody is bullish. We still have a lot of bears in this market, and I just showed you the chart that shows we're upward trending with bullish price action and bullish trending. So while this market continues to head higher, that doesn't mean that we need to see a correction just yet. So let's go back to the chart, and now that you know we still have more bears than bulls, and we now have more people going neutral on the survey, which means they're likely to continue to move to cash as the market heads higher, that's only likely going to drive the stock market higher and higher. Now also, don't forget we're in the Santa Claus Rally part of the year. There's almost no more big money sitting in the office trying to do any big moves in the market for the rest of the year. That's where we're going to get that retail low volume melt up scenario because a lot of retail isn't heavily shorting this market or trying to drive the market lower. That's the job of the smart money and the big money to try to move the market. So we're likely to just grind up to finish out the year on low volume, and we should continue to melt up to higher prices, and that's known as the Santa Claus Rally. There's really no holes or nothing going to happen news-wise or any big news stories that's going to cause the big money to try to come back in over the holiday and try to sell their positions or try to short this market. Now, knowing we're likely to head higher for the rest of the year, there is still some concerns going into the next year where we could see a correction in the stock market. So let's now switch over to a monthly chart where each candlestick now represents an entire month's worth of price action, and we can see that we are getting a little overextended. We still have very bullish price action and very bullish trending, but you can see on a monthly chart that we're starting to extend outside the upper Bollinger Band, and we're getting really far away from the 20 simple moving average. Now that doesn't mean we can't go higher, and on the weekly chart we're likely to finish out the month of December a little bit higher than we are now, which on a monthly chart you can see will be closing above the Bollinger Band. Now these Bollinger Bands do expand, and in January we will get an expansion of this Bollinger Band, but it is showing that we are due for a pullback within the next few months. So I'm not going to try to predict when that correction is going to happen in this episode, but we will be talking about when the stock market correction should be coming in future videos. But right now, to finish out the year, I'm looking for the S&P 500 to still reach my price target, which is somewhere in the 3700s. I think we're likely going to see that price target before the year is over in 2020. So I am predicting a Santa Claus rally, and we're going to continue to head higher. That doesn't mean we can't have any selling and the stock market won't have any red days. That just means the general trend is going to continue higher. So looking at a weekly chart, we're likely going to end the month of December somewhere near the top of the Bollinger Band, and you can see that is definitely in the 3700s. So my price target on SPY is about $377, which equates to a very similar number for the SPX, somewhere around 3770. So that's my prediction to end out the year 2020. Don't forget to enjoy the holidays and relax and get ready for a very exciting trading year for the year 2021. We're going to be really active in the Stocks Channel Discord server next year, and we're even going to have a few surprises, which I will be announcing very soon. So I hope you all have a very restful and relaxing holiday, and I still will have my daily update videos next week. So thanks for watching, everybody. I hope you enjoyed this special weekend update, and as always, I will see you in the next episode.